Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been trading for coming up on 15 years at this point, and we're going to dive into this video looking at the broader market as we see some signs of bull slowing. We closed slightly red on the week, and we're keeping an eye out on the potential of some bearish patterns. We have a lot of headlines in play. China deal over the weekend, maybe, maybe not. But price action is king, and a lot of people are trying to apply macroeconomics to short-term price action, and it's not working well. So we'll point out the key levels of what's most important. We got a lot to be looking at in terms of individual setups. We know Bitcoin and crypto stocks have been extremely strong. We've got a bit more of a risk-on environment. Quantum stocks had a really good week thanks to the start of earnings. Silver's got a setup that we need to be keeping an eye on, as well as a number of other names that have potential cup and handles on longer-term timeframes. We'll certainly look at some bear setups as well, and I'll let you know how I'm positioning. All right, let's talk a little bit about rising wedges to start. So a rising wedge is a pattern that shows bull exhaustion. It's an uptrend, but each bull break goes straight into consolidation and lacks follow through. I am most confident in utilizing patterns like a rising wedge, falling wedge, head and shoulders, Adam and Eve reversal when it aligns with the most likely scenario on a longer term time frame. So I want to see a big hourly drop. I know an hourly lower high is the most likely scenario, and I scout a 5-minute rising wedge to show me that hourly lower high is shaping up. With what we have right now, we could say if this is a daily rising wedge, that still remains to be seen, the burden of proof is on bears for me to prove that this is a rising wedge. It would potentially try and shape up a monthly lower high. We know on the NASDAQ, anything under, pretty much, I'm just saying anything under the all-time high is a monthly lower high. If that monthly lower high is going to form, one of the ways it could do so would be a rising wedge. So that's what we're watching here. If we go to the 4-hour and draw it, we want to make sure we've got at least 3 touches, ideally, of a trend line in both directions. And it's actually a little bit better on the S&P 500 in terms of getting those touches. You can go to the 12-hour. Let's just draw it here real quick. 12-hour. So this is what I'm watching in the short term. Again, you got these 1, 2, 3, 4 touches, and we're going to find out next week whether this confirms or not. And if we're going to confirm, we need to break support. On Friday, we came close to breaking support, but didn't really get much follow through, ended up just being a daily inside bar. So there's 2 ways. So now that I watch this pattern, right? Okay, and I'm aware of it, but it always still goes down to price levels because I can then just make a simple statement. If we do not break the low of Monday, or no, I should say Wednesday, if we do not break the low of Wednesday, we're not going anywhere. The bears are not going to prove a thing. So I know what I'm watching for. And then in order to prove it, I know that we must break this level. And if this level does not break, the bulls have absolutely nothing to worry about. And so that low of Wednesday is a key support level on a lot of individual names that we're going to be keeping an eye on. So I'm definitely watching for it. Right now I am positioned. You know, it's a bit tricky to say how I'm positioned in my IRA because, for example, on Monday, I went long miners with NUGT, which we'll talk about towards the end of the video. And so that's a bull long position. But recently, the metals in the market have been a bit inverse. So does that mean it's a bear lean on that pattern? You know, it's difficult to say. I have a bit of a bull lean overall because on Wednesday I did exit a bit of hedge position, not as much as I would have liked, but at this point I'm waiting. I'm patient because again, you know, this past week not a whole lot went on in the NASDAQ and the S&P 500 as far as giving us new information. We got a new support level that's key, and now we're just watching the high, 2 resistance levels. We got, of course, the high of the move at this point. Broke resistance without much follow through, and then the high of this bear flag on the way down. This is the most important short-term resistance zone, and that's the most important support. So I'm just waiting for one of these to break to give us more information. And we look at the S&P 500. Again, going to draw this a little sloppy because we're going to be quick here, but roughly same thing. Is this a rising wedge? We got the daily support level. We've got our top of this bounce and our top of the bear flag on the way down. These are the levels that I care about. As far as the major sectors, we've got, again, the way I view it is we got QQQ, which for me just encompasses tech and semis. We got XLF, we got XLV. XLV is very clearly the lead bear, as we'll see here. XLF is clearly the lead bull, and big tech and semis are somewhere in between. So we look at SMH, we look at the daily chart. Could this be a rising wedge as well? Yes, you could draw something similar. 4-hour time frame, draw something like this. Again, I'm being a little sloppy just to be quick here. And as far as resistance is concerned, we've got the top of this move and the top of the bear flag. And we have a good bit more space above that Wednesday, or it was actually a Tuesday higher low. So we set the higher low a day earlier. That's now our guide for full control. Look at that back test. So double top, get above it, back test and hold into another leg up. Last week's video, I was saying, these are a couple bear plays I'm watching if the broader market shows weakness. And it was NVDA, it was Amazon, and it was Tesla. And the reason for that was because we had multiple tops at the Trump pump high. And obviously we got over them. I have a swing position in Amazon. Not convincing just yet. I definitely want another leg up. Again, it's bull break straight into consolidation, new high straight into consolidation, new high. If we go straight into consolidation, those are the characteristics of a rising wedge. I've got a comfortable swing position from entering on one of these. I guess it was the fourth. But I need another. I want to see 200 plus if I'm going to have confidence here that we can get another leg up. The point I'm trying to make is all of those names have broken resistance at least a bit. And Tesla had not until Friday. And that was a clue that had me looking long Tesla, which ended up being a really good trade on Friday. But first NVDA, again, daily uptrend is our guide. Bear flag resistance from the way down. So you can see most things are following the same kind of setup. They just have a little bit different levels to be looking at. So Tesla, what were the clues pre-market to be looking long on the open? So as I just mentioned, to start the week, Amazon, NVDA, Tesla all had multiple tops at Trump pump bounce highs. Tesla is the only one that still has it. So if you've got a grouping of 3 things and 2 of them break bull, the probabilities then favor that the third one is going to break bull as well. That's what I would call a laggard bull break. So that was one reason pre-market. The next was Tesla high of yesterday. It's in play first thing. We then ended up with a small gap up open above it. Bulls stood out strong in the first 10 minutes yesterday. So Thursday, the first 10 minutes, it was just all buying. So that, in combination with watching for it to be a laggard, in combination with it testing a key short-term resistance first thing, all had me with a market buy filled out, just watching the first couple, what I thought would be the first minute of open to see how we shape up. I ended up pressing the buy button 7 seconds into the morning. And that was, by the time I posted, it was 7 seconds or a minute into the day. Got long Tesla first thing, out some real quick, stop under the low, risk free. If the low of the day is set, that's it. I'm comfy. And again, it took 7 seconds because I see the open. What I want to know first thing is, do we drop? We open at 290.28. We hit the low of the day by 28 cents, and then we hit a new high of the day. And then I say, okay, we're not dropping first thing. I'm trying along. And then now I'm playing off 290 if I'm keeping a really tight stop. And then, again, quickly, I got filled just under 291. If I sell a bid at 290, 250, now my break even is right down there at 290, and I'm very comfortable. And we saw the bulls just rip on the morning. Again, Thursday, we did it. We saw this on Thursday. We just lacked follow through. Thursday, big move first thing. Gave it all back. We did get another leg up, but again, I was just looking for that first thing move, and we got it in a big way. And I was all out once we lost 1 minute EMA 12. Sell a little bit more, just under 300, and then losing 1 minute EMA 12 was my signal to exit the trade. So that was a really good one. And again, it was just the preparation of combining those little details in terms of looking for the laggard bull move. And so now on the weekly perspective, another leg up here, daily chart. We've got an uptrend. Again, a bit of an upper wick. Bulls really want to hold the back test of 293 to 294 here. Well, 292 to 294 zone, because we topped out 2-3 times. And if we fall back under that to start this coming week, it'll be a little bit of a red flag in terms of the lack of follow through. And then just like these other names, we'll just put a uptrending resistance line that rejects the price that we'll have to be keeping an eye on. But we could say Tesla had one of the more bullish days on Friday, and we'll see if that breakout can follow through it all. And we're watching this resistance level as well. 304, we topped out at 307. But a nice day trade. And again, just showing a little bit of insight into how I do things sometimes. All right, XLF, lead bull on this bounce. How can we say that? Well, we can compare a number of ways, but retracement size from the high to the low, we've retraced, easily 70 to 75%. We do the same thing on the NASDAQ. What have we retraced? We've retraced more like 63%. So it's just a bit more bounce follow through. But again, same thing. I'm looking at the potential of a rising wedge, 4-hour time frame here. Draw it up. And I was ready for this one on Friday. I made an attempt short and exited. Tiny loss. And the reason was I was saying, okay, if this is going to be a 4-hour rising wedge, keep an eye out for an hourly head and shoulders. So we opened higher Friday morning. I was looking to fall through. So what does that mean? We got to break neckline support. Look at these holds, extended hours and regular hours. 49.72, 73, 76. And then on the morning, when we hold 72, to me, that's okay, not ideal. I want to see support break. So take a little bit of position off into support. I stopped out on this move. We tried again and held it. So that's a very clear, again, previous resistance acting as support. This level must break if it's going to be a 4-hour rising wedge. I'm going to be watching for it the first couple of days this week, but bears failed to prove it on Friday. If they prove it to start this coming week, the higher low on Tuesday, 48.97, is the most important level. If we bear break but hold that level and don't see follow through, we know the bulls continue to keep full control of the daily chart. We've just been setting higher lows. So the fear bottom is hit. There's a higher low. There's a higher low, higher low, higher low, higher low. Nothing changes if we are forming higher lows. We will be able to say, hey, something's different from the bounce of the last few weeks when we lose the higher lows for the first time. And this applies to a lot of individual names and a lot of sectors. So that's what we're watching. XLV is very easily the biggest bear major sector. Again, all the way back to the long-term patterns video for 4 months ago, we were looking for yearly consolidation for the second time in 16 years because of what the yearly candle looked like in 2024. We got followed through. Initially, bears definitely want another leg down. We're rejecting from EMA 12. We had a 4-hour rising wedge here as well. I was watching this one. I missed the entry move. You can look at headlines here. You've got the biotech sector has been getting crushed. You've got, again, RFK Jr. doing things. And you've got, Trump announcing Medicare, price, whatevers. I don't care at all about the headlines, but as you can tell with my vague overview, but clearly weak. So if anything's going to break the fear lows, healthcare will do it first and tell us, hey, maybe the other sectors are going to follow. But again, just looking down at those lows now, 131.56, 129.66. If you told me I have to be short a major sector, I'm definitely scouting healthcare. The things I don't like about it, it's not as liquid as other things. The instruments are not the same. You don't have a bearish leveraged ETF like you do on the financial sector, the NASDAQ, the semiconductors. It's just clearly it's not as utilized by traders, so the instruments just aren't there. But it's a lead bear. And so we're going to watch to see, do we break those fear lows and get another leg down? And, if we're looking long term, I'm going to be watching. Well, we'll take it 1 week at a time, but could easily see a move down, down towards the low 120s at least, looking at this yearly chart. And we got space for a daily lower high to be the result of the next bounce. It's a daily stair-step drop right now. Lower high every day, 7 days in a row. Biotech sector, as I mentioned, also weaker. Weekly lower high set. We've been setting weekly lower highs for a few months at this point. More space to try and hold the fear low, but again, clearly healthcare lead bear. Quantum had a good week. QBTS had an earnings report that bulls really liked. And we had so much volatility on Thursday. Look at this Thursday move. So we gap up. we see a quick push up. We double top at the pre-market high. We dump 15%. And then we turn around and rip 41%. Insane volatility in the quantum names to end this past week. And we're looking up at the recent high on QBTS. And there's a very clear resistance zone here. We're battling that. We have an hourly uptrend still. If we break it, we're going to be looking for a daily high or low with tons of space for it to form. Other names in the quantum space, IONQ, guess what? We're watching for the possibility of a rising wedge still in play. RGTI has earnings on Monday. Bulls are a bit weaker because we have not broken recent highs. QBTS, clear lead quantum bull. And the other names have proving to do. We'll see what the earnings reaction is. But again, just the volatility alone, great for trading in these names. Tried to long RGTI first thing on Friday as well, and I did. But I exited pretty quickly once I saw Tesla was the place to be focusing. When I'm day trading, I generally only want to be in one trade at a time to give it my full attention. If you know I position and then I set a break-even stop and now I don't need to watch it, it's either going to get to my target or stop me out. Okay, I can focus on other things. But this was actually the first time that I had entered two individual names within the first 2 minutes of trading in any given day. 99% of the time, it's just one name. Because things are so fast on the open, I want to be giving it my full attention. Crypto. So Bitcoin's knocking on the door of all-time highs. Bitcoin was a top watch for us into the end of April and the start of May for a monthly high or low. We set it, and now all-time highs are in play. MSTR was showing us relative strength before this move got going. Grabbed that swing position a few weeks ago. That's going well. Still riding that MSTY, the dividend version here. But the market is telling us, watch crypto stocks. Why? Well, look at CEP. CEP was a SPAC and, getting into Bitcoin strategy like MSTR. And so once that news comes out, we run 380% in a week and a half. And granted, we topped out. We know that's how these moves end with big drops, but massive opportunity there. Then on Friday, you get word that this penny stock, NXTT, has significant Bitcoin holdings, they announce. And in one day, this penny stock shoots up 900%. And then after hours, it shoots up another 138%. So again, these are not investments. These are find the euphoria momentum in the market, this is my trading career summed up in a nutshell. Find the euphoria in the market, trade that momentum, sell on the way up into strength, knowing you're not going to nail the top. You are going to leave money on the table, but you're not going to be holding any position when we drop 40% from the highs. And then play back burners and look for short-term oversold conditions for entries to play the volatility. And so, again, just having these two Bitcoin-related names ripping like this is number one. It's showing other things. Hey, if you put crypto on your balance sheet, maybe your stock can run like this. But again, with Bitcoin on the precipice of all-time highs, it's just clearly the market is saying, focus on these names for breakouts. And obviously a name like this, massive risk and reward, lack of liquidity, tons of halts and gaps. You got to know what you're doing. But both of these names have a significant lack of liquidity, which is why bulls are able to run both of them in the manner that they have. But definitely gets my attention. Like, okay, keep an eye on something that's illiquid, liquid enough to trade, but illiquid in the terms of hundreds of millions of dollars pouring into it, and watch for those hype runs. Oil. So we were watching for the possibility of a 2-day higher low, and we got it. So equilibrium watch here, standard, low. So volatility, big drop, 50% plus bounce retracement. Higher low, we're going to scout a lower high compared to 64.87, and we're going to look to keep tightening up this coming week. And we'll look for this to break later in May to give us some direction from there. Haven't looked at energy in a while. Not a very impressive bounce. Again, bull break, no follow through. Clearly struggling at resistance. Bear's got a top fishing level to be looking at there. So if I'm looking short energy, I want to try and align a short with oil setting a 2-day lower high. All right, metal. So the dollar's got a weekly bounce underway. We know a weekly lower high is the most likely scenario, and the daily uptrend is our guide for when the weekly lower high is being set. So uptrend confirmed, higher low, higher high. So we're going to be watching for that. We've got gold tightening up. I'm just viewing gold as an equilibrium as well. High, low of the pullback, lower high, trying for a higher low. So just trading sideways a bit, no red flags. We have a very clear level. We could say the gold bulls remain in breakout mode, blue sky breakout mode, as long as 3,200 is support. Lose that, and we'll say, okay, a longer term shift is taking place. But silver is a top watch for me from here because this setup screams to me we could break out in a big way. Silver is known to fumbling those setups, but this is a top watch for me. And I actually added some silver to end this week because I like the risk reward. What's the risk reward here? And why do I like it? Well, again, tightening range. So this tells me volatility is coming here. If not this coming week, certainly the next week. And a double top. Look at this, these tops. These are 13-year highs. So we have a double top at 13-year highs. And if this tightening range breaks bull and gets to that double top and breaks the double top, then we're at 13 plus year highs and in breakout mode, essentially. So what's the risk reward I like here is, let's just use SLV, the instrument. But 29 needs to hold. If this tightening range, we could break 29 and then just keep tightening up on a longer term time frame. But if this shorter term pattern is going to break bull, then 29 needs to hold. So if I'm in at 29.70 on Friday, then I'm risking 70 cents. And the reward, if we break out over this high, I'd be looking, 33 plus. So let's just say reward is $3 plus, 330, and risk is 70 cents. So that's the kind of risk reward you want to be looking for in setups. Binance is a cryptocurrency that has nothing to do with silver, but the setup reminds me, I look at this 2-day tightening range. They're coming from different points on the chart, but just watching this tightening range got a quick bull break, and I'm looking for silver to try and do the same. Tightening range, quick bull break, got to get up over 33.70 this coming week. I did enter the miners on Monday, and that's going well. Took a little profit. I'll stop out if this low breaks. The thesis here is that's either a weekly bull flag or I'm wrong. So make an entry for the bull flag, exit a little bit into an initial gap up, solid, nice move. Very low risk stop. So again, I like putting myself in low risk, high reward scenarios. Duh, but that's an example of how to do it. And so metals and miners, top watch into the end of May as well. Natural gas. Again, natural gas has had a solid move. We know a monthly higher low is the most likely scenario. It's trying to shape up. Weekly chart, big enough bounce where I will be watching. Again, this could be a bear flag, or I should say a bearish head and shoulders, but it's a big enough weekly bounce where I'm going to keep an eye out. Again, I don't care at all about natural gas. I don't care if I miss this move. I don't care, and we'll talk about that in just a minute. It just reminded me of something, but it's a superpower to not care. It doesn't mean I'm lazy. It just means that I wait for the trade to come to me exactly as I want it, or it's like being picky with dating, right? I know what my standards are. I know what I'm looking for. I'm not going to settle. And so what I want to see is whenever this move tops out, if it goes higher, great. More confidence that a weekly higher low is the most likely scenario. I'll be scouting the weekly higher low. And eventually, just like I did down here, I'll be looking to say, this is either the weekly higher low or I'm wrong, and I'll use that low as my stop. Just like I did down here, I said I made an entry right around here. I said that's the weekly higher low or I'm wrong. And fortunately it was. So I will do the same thing here, but again, it's almost like I'm playing hard to get with the trade where I don't care. And this goes back to a day trade on Google on this news dump, right? So Google, Apple, maybe not going to use Google or use an AI search, whatever. By the way, Google has been in trouble for a while with AI, But I was surprised at the size of this move because, well, duh, people are using, I mean, I use AI, I use Google 10% of what I used to 6 months ago. And that's the trend. That's not changing. So I was surprised at the size of the reaction. But this is where teamwork comes into play because, and I don't have the screenshot here, but a bunch of people saw this, so I'm not a liar. Joey, Jungle Funk Joey, posted in the chat room, hey, Google's getting towards historical oversold RSI levels on, I forget what he said, 15-minute, 5-minute, 2-minute, something like that. All right, I'll look at it, right? So I pulled it up, and at no point did I have any interest in trading Google. I don't trade Google often at all. So I looked at it when Joey said historical oversold RSI, and I said, nah. I forget if I had already made my day at that point or whatever. I was like, I don't care. I'm not interested. And then from his post, we saw one more bear flag on the way down. He posted it in the 149s, I believe. And so we had one more leg down. And after this leg, I said, all right, fine. We're getting to extremes. If we break 148, the psychological level that I was watching at that point, I'll make an attempt. And so we break 148. I'm filled at 147.91. 7 pennies from the bottom, and that's the bottom. I sell a little bit into 1 minute EMA 12. Why am I selling so fast? Well, we've been rejecting from 1 minute EMA 12 the entire way down for the last hour. And so I know that if we're going to keep heading down, and if I got a bad entry, we're going to reject from that. So I, in advance, sell a little bit there. Maybe it's a third. And now my break even is under the low of the day. And I stick a break even stop, and I either nailed it or I don't lose $1. And so then it keeps following through. I sell a bit more, and it keeps following through, and I sell a bit more. But the highlight of that trade is, number one, teamwork. Thanks for the assist, Joey. Number two, I didn't care about missing this trade at all. I didn't care about Google at any point on this dump. And it was almost like the trade grabbed me and slapped me in the face. So, all right, if you're going to hit me in the face with a good setup, all right, now I'll take it. And so often, being that mindset keeps me from entering a move early. So many people were asking me, why didn't you enter on a 149 break or a 150 break? We were extreme. It was because I didn't care at that point. I don't know how else to quantify that feeling of just not caring. And again, doesn't mean I'm lazy. Doesn't mean it just means that I don't care if I miss the trade. And then when you get to extremes of the extremes of the extremes, all right, I'll try it. I did the same thing with XLE. I don't trade the energy sector, but if you give me this monster dump into extremes, fine, I'll give it a shot. So that's my mindset. So what's the takeaway there? I would suggest practice strengthening that, because so often, strange noises, so often people feel FOMO, and the not wanting to miss the trade is what leads to them to enter too early. And I know it's very hard. I didn't develop the not caring aspect until I had thousands of trade and 10,000 plus hours under my belt. When it's new and exciting, I get it. I felt the FOMO too. I didn't want to miss the trade. But once you realize there are infinite, as long as the market is a thing, there are infinite trading opportunities. And if you miss it, it doesn't matter at all. You got to burn that into your brain. All right. Appreciate you watching. Thanks everybody who's been checking out the free trial in the chat room. Looking forward to live streaming Monday. I think that's closed now, so probably shouldn't have mentioned it, but do good things.